Welcome to the Single Source podcast, featuring fund managers at the forefront of private markets.
We're joined by Duro Capital CIO Nishay Goel. Duro Capital is focused on spreading prosperity by investing in India's most promising companies. Nishay, please tell us more about the strategy. What companies are you investing in?
We at Duro Capital run a concentrated, long-only, all-cap India equity strategy. We typically have around 15 to 20 positions, where the top 10 positions form around 70 to 75% of our AUM. We are benchmark and sector agnostic. Every name is underwritten to a 25% return hurdle. What we look to invest in is businesses with a defensible right to win against irrational competition, which we internally call the why of a business. Businesses that are undergoing structural change that help these businesses compound earnings at over 25% during our holding period, which is what we call the why now of the opportunity. And we look to buy these businesses below intrinsic value, which is our price value pillar. And that's how we find the companies that we invest in.
Where are you seeing the most attractive opportunities in India today?
The Indian BSE 500 index is actually trading only slightly below its 10-year average PE. But what is interesting is that almost 50% of businesses in that index are down over 30% from their highs. And I think that massive dispersion is where the investment opportunities lie. As for us specifically, our largest position is, for example, the second largest telecom company in India. India is the fastest growing data market on the planet. And our portfolio company is by far the best run player in this duopoly market in Indian telecom.
Telecom, financial services, you said 50% down, some are 30% from their highs. Is that the why now in terms of why you believe not just what you're investing in, but why it's a compelling time to invest in Indian equities right now?
That's actually very well put, because I think there is a significant amount of pessimism when it comes to India today. And I do think that pessimism is largely in the price. 2024 and 2025 were the first back-to-back years of negative foreign outflows from India in a century. Interestingly, this is happening at a time when earnings growth has actually bottomed. And the government has also delivered on some pretty big reforms during the last 18 months. Historically, every time India has underperformed other emerging markets, that underperformance has reversed within 12 months, every single time.
You mentioned outperformance. Perhaps it's coming from that pessimism in terms of presenting attractive opportunities in that space, climbing the wall of worry. That may work to your advantage, especially with an active strategy. Are these the types of things that differentiate Duro Capital from other managers investing in EM?
I think you put it really well. I think the first thing is that Duro does not run a consensus India book. That's number one. Our active share is over 88% and has consistently been over 85%. So we look very different from a typical India fund. This is active investing, it is bottom-up investing, and it is about creating a portfolio that looks very different from your typical index exposure. And we bet our own dollar behind it. So there is massive alignment. There is significant GP capital in the fund. So we have our own skin in the game. And as you mentioned, this sits on top of actually 15 plus years of a track record with significant outperformance managing institutional foreign capital into India across many cycles.
Investors really look for GPs that have skin in the game, so to speak, as you rightfully pointed out. In terms of allocation, our investors on the Apex Invest platform, how should they think about this strategy within a broader global equity portfolio?
Specifically for Duro, treat us as a high conviction India alpha sleeve, right? We are not just India beta. Most global portfolios, I think, will have some India exposure through an EM fund or an EM index. But we are not your typical India exposure. Size India for the long term. Size us for the long term, because India has beaten most markets over the long term, 20, 30-year periods. It's performed in line with the US markets, which have done remarkably well. So patience pays off. It might not be a core holding, I get that, given India has a lower weight in the ACWI index, but it performs as well or better than the biggest exposures in most portfolios. And then when you combine that with true alpha exposure, that's how you should think about exposure to Duro and India.
Thanks for listening. For more, visit apexinvest.io.